Good evening, guys. Ken at Tortoise Capital. This is uh, cohort 4 coaching. Wednesday night, March 12th, 2025. Yeah, so just to get us started, just an update on the cohort scheduling and the organization. I now think we're at the position where uh, we have functional interests aligned now, and it makes more sense to me to have a particular topic each night of coaching so that uh, everybody that's kind of interested in the same thing can line up together. So my intention is Monday nights would be the ones where we got a number of guys that just love back testing and simulations and automating systems and number crunching. So that's what Monday night's cohort is going to be about. Simulations, back testing, system automation, refining the technical pieces of robotic trading, if I can say it that way. Wednesday night will be more for standard check-ins on your performance, concept development or discussion, refinements of the rule set, as opposed to the technical elements of testing. So when you guys are, for instance, I think like most of the time you two are Wednesday night guys because you come in and you're talking about very specific things and it's about your systems and you're getting the system rules refined. But there's a couple guys on Monday that are probably better suited to be here on Wednesday because they're not really following what's going on with the back tester. So like Mark Holland is more of a back tester, so I expect him to kind of go there. Now, you're always welcome to attend as many of these as you want. Thursday night, I'm going to start with guys that are in like my foundations course or taking a swing system or something like that. That more of Q&A on the systems that they haven't really picked a system that they're working through. I would consider them to be more novice or young apprentice. They're still learning the language and explain the difference between a 5DD and a washout or something like that. So Thursday I see as novices and apprentices. Again, you can attend any one of those. Like if you have a question in that area that you want to discuss. On the other hand, any question you ask on that given night, I'm going to answer anyway. If it's not sort of aligned with that day, like if suddenly you came out of nowhere and we're starting to talk about back testing, I'd probably answer it anyway. So don't think you got to be overly strict with that. Part of this was really more to help the guys that they felt lost in the systems back testing and automation. And so that's why they're kind of moving to Wednesday. Thursday then will be for novices and apprentices. Sundays remains the kind of like the international hour of any topic. We meet every other Sunday with Hamad and you guys are obviously welcome to listen in on that as you wish. But I thought that would better align people with where they belong. And then as we get new people, I can kind of vector them to the area that seems to be the best suited for them. Like, Jonathan was attending Monday night, but he was probably spending more time listening to the Wednesday night crew, and it just made more sense to kind of align him with that. And then Tuesday is a special kind of group. That's two pro traders that have very special interests in the S&P with very complex option strategies that I don't understand. And what I'm helping them do is understand my framework for directionality of the S&P out of critical states and how to sort of frame the turning points and directional moves and then they're translating that through their own magic into options trade. Now we don't spend very much time talking about the options strategies, but it's really focused almost exclusively on intraday SPY and framing. So you can listen in on those if you wish, obviously, but I don't think it matches very well with anything you guys are doing directly. So I would encourage, I think both of you guys, you feel like Wednesday night guys to me. And uh, anyway, I will probably, I think I'm going to do this for sure. Is I'm going to restart the new cohorts and put all of the recordings on a new single page. And that way there's always one place you go to, and it's in chronological order, and I will put the title of the theme, whether it's like a back testing group or the systems group or the novice group, so you can kind of see what's going on, and that way you don't have to jump around between different pages. um, I will probably keep the original cohorts the way they are just for clarity. I don't want to mix them all into one big one, but I think going forward, I will I'll just put them on one chronological page for ease of navigation for you guys going forward. So that's just playing a little bit of catch up. On down the stream, I'm going to offer you guys the same thing that I'm doing all the old timers. I think after you go through a year of the intensive coaching like you guys have done, that I should go to almost like a sustainment rate of 1,000 a year instead of the big piece, and that way just kind of keep it smooth, and the sustained rate of subscription, pain and suffering in the first year, and then smooth it out later. So with your permission, I'll do that in the future whenever your year or 12 or 15 months is up. We'll get that sorted out then. Okay. So that's just some admin notes to clean up the battlefield. Starting at 8 because of the soccer season has started, and because I want to try to get back into the swing of the nightly podcast. There haven't been many guys listening in at 9, and I've been starting to slack a little bit. But if I go from 8 to 9 with coaching, then I can roll right into. I will maintain my momentum and do a little better with the nightly podcast as well. So that's by way of just clean up and check in. So that's where we are now. I will say this. I got recruited pretty hard today by a retired 2-star general who is kind of leading the way for the Army in corporate America for AI solutions for department. He's got 12 companies that are startups in AI that he's the CEO of. I knew him when he was our 1-star commandant, and I've known him for about 10 years. So he came in for a little 5-minute office call with me today, which ended up becoming 45 minutes of him taking notes on what I've been doing and making plans to connect me with some of his planners and ops officers. If I'm not careful, I'll get pulled into another line of work altogether. I don't think I want to do that, but it was kind of interesting to see how everything that I've been talking about in here connects so strongly with the Army and what they're trying to do. And it's pretty satisfying work for me to be able to impact the Army in that way, sort of a payback. So everything's going pretty well here, back into normal weather. It was in the high 60s, low 70s today, and soccer was great with the little kids, had a blast. All right. Why don't you give me a quick check in, and let's just go ahead and get started. And who's ready?
Yeah, here in Calgary, still very warm weather, as the unusual warm. But we always have heavy snow in March, even early April. I hope for the check-in.
Yeah. You doing okay?
Yeah.
I like the new Canadian motto of elbows up with the US. I mean, I think if you guys were smart, you would coordinate with Denmark and purchase Greenland just to be just to piss everybody off or piss off that orange man.
It can. We even don't have a elected premier, right?
Yeah, right.
The old guy gone, the new guy, never
Yeah,
been a politician. So we have our chaos to deal with.
yeah, that's true. I'm on the Canadian side of the trade war. It's the dumbest trade war I've ever seen. In 50 days, the orange man, I think of him
Yeah.
as the toddler in chief, has managed to destroy our economy, ruin the stock market, alienate every single ally we've
Everybody.
ever had in the last 80 years, and has no plan to come out of the hole. And he's got a bunch of idiots following him and blindly supporting him. Drives me absolutely batshit crazy.
And I think China reaction is very interesting. They don't
Yeah.
talk.
Yeah, they just say, "Hey, hey,
whatever."
when your enemy is cutting off his own head, don't interrupt him."
Yeah,
You know,
that's surprise to me. They don't react.
when your enemy is shooting himself in the foot, let him go. Don't try to talk him out of it. You know, if I was Canada, I would be looking to establish long-term trading deals with South Korea, Japan, Australia, and the EU,
Yeah.
and completely offset all U.S. sales with sales to those powers, and lock in long-term contracts and say, "Yeah, I know you want to renew trade relations with us, but we don't have anything left. Sorry, you should have thought of that, nitwit." You know. So we'll see. We'll see how it shakes out. I think the mid-year election, the 2-year mark, is going to be an extraordinary one, even though it's not a presidential cycle.
Yeah.
But to watch what the potential balance of power might be in the House and the Senate will be fascinating, which is part of the urgency that he's using. Because I think he thinks he better get it done now, or he'll never have his third and fourth year. He's going to be a lame duck. I'm pretty sure. What I worry about is him resigning and appointing J.D. Vance as president, and then picking his son as VP. Mm-hmm. That the thought of that is even more terrifying than
Can he do that?
Yeah.
Oh yeah, yeah.
Oh yeah.
Wow.
Yeah.
That's American politics right there.
Yeah, and then the son gets to run.
Right.
Yeah.
And with all the advantages of the incumbency, that's just. I thought the Bush family was bad, but man, oh man, these guys make. Anyway, go ahead. Let's get her started here. Let's get out of this state of despair that I find myself in.
Eric, you want to go ahead?
Oh, I can go ahead. That's fine. Yeah.
Okay.
Yeah, everything's good up here in Minnesota. We have our teaser spring. It's going to be 75 on Friday. So we all know it's a fake out, right? We're going to have another blizzard or another snowstorm, but we're taking it, right? We're going to enjoy it.
You got to.
Yeah. Okay. So Ken, you want me to run right in here?
Yeah, just go ahead, zoom.
Okay, here we go. Sure. Okay. So just a couple things. 2 weeks ago, I missed last week. I'm sorry, but 2 weeks ago, Ken, you had mentioned to start to track the trailing 30 trades, right? So I started to do that. And a week and a half ago, kind of all hell broke loose, right? All of a sudden, my last 30 trades, it was a coin flip and the payout was 1-to-1. And the market was just going crazy. You get signals, immediate failures, and, just try to manage your stops.
Max volatility,
Yeah, and so what happened to me, though, I kind of started to freak out, right? And that's when I emailed you. And I started to overtrade. I started to try to make up just because of what I had done in the past. I'm thinking, I got to get back there, right? Got to get back there,
Yeah.
push the market, overtrade. And that's just total frustration because that never works, right? So that's when I emailed you about what's going on. What do I need to get back to? So I just kind of followed what you said. I had to sit back, assess kind of what I thought was going on. Definitely drop position sizes down and move to paper trading until some new glimmer comes in.
Yeah.
And then get back to zero state, settle everything down and start to look, maybe look rationally at what's going on. But I tell you, when I was in the middle of that, it was like, wow,
Yeah.
I guess I hadn't seen that happen before.
Well, if you think about the volatility of volatility, excuse me, you get, 2/3 of the time, if this was average volatility,
Yeah.
2/3 of the time it's between, it slowly is going up from there to there. So that's sort of the maximum normal volatility and sort of the minimum normal volatility. And it's in here 2/3 of the time.
Mm-hmm.
And then about 1/6 of the time, it's very quiet, abnormally quiet. And then about 1/6 of the time, it's abnormally very volatile. So this volatility here, once you get a volatility and then you get a volatility spike, you tend to get a bunch of spiky days right in a row, and it's very hard for that to sustain. There's just because guys are blowing up and they're just, let me just back up. So you find yourself, there's times when the market is just quietly oscillating. There's times when it's broadly oscillating, and then poorly drawn. And then there's these times when, again, all hell breaks loose. And if you say, hey, this is only 10 to 15% of the time at most, just call that 10 to 15% when it's a black hole. And you say, look, I've got standard rules for what to do when the market's in here. I know I have normal, this is normal conditions, and I have this concept of standard work. And my standard work applies in here. When my performance is bad, it actually is evidence that you have crossed over into this abnormal time. And what I need is standard work for abnormal conditions.
For that. Yeah, right.
It's the concept of standard work is the same.
Mm-hmm.
The language may be the same, but the actual rules and then the position sizing may be different, should be different. And what we got to do is we can't let the 10% of the events cause us to think these rules are not, well, they're broken and they'll never to be returned. No, it's just that the market, here's the market conditions where your system is optimized, and then the market's pathways look like this. And so we just got to say, look, we know when the market and system are in alignment because the histogram looks like this and the coin flip looks like that. But when it leaves that and comes out into this area, that doesn't mean your system is broken. Your meta system, we would say, look, if I was using the rules that are optimized for this period and trying to use them out here where they're not rules, then my system is broken because I'm trading a system when it's not ideal. So the idea behind the 30 trade expectancy is that if you've got sort of this positive expectancy that looks, I'm just going to draw it as a flat line. Let's just say it's 0.3 expectancy. It can vary a little bit. The 30 period will vary a little bit like that. And what you end up getting is something like you'll see that there's a seasonality, or there's a plus or minus one Bollinger Band around that is really the seasonality of that rule set. If you go back 300 trades and then collect 30 and then keep a rolling 30, you really have 270 data points, because you had day minus 3 or trade minus 300 to trade 271. That's 30. And then I go 299 to 270 and so forth. So I keep dropping a trade and adding a new trade, and I keep rerunning that. And what you'll discover there is that you could have the expectancy, it might average 0.3, but it might go through a series of swings like this, right? So what you want to do is probably take that 300 trade, take the 300 trade to establish the long-term average. God, it's such a, that pen screwed me up on that one. Sorry. All right. So you want a 300 trade average and then plus or minus one standard deviation. All right. And then inside of that, that framework will be very stable because it's 300 trades. That will vary almost not at all. It's hard to distinguish that. But what you'll see is your 30 trade SMA is going to look like this. And it might even dip down into here and then come up into here. So these are the regions and the rule sets that sort of figured out, right? So you take, I'm going to redraw that a little more cleanly. So you got the 300 trade average. I always draw that 30 SMA as red. And I always draw the Z3 lines in red so I can see the envelope. I want to see the envelope in red. So all I'm going to do is I'm going to put the long-term plus or minus one standard deviation on there. Minus one and plus one. So now imagine this thing came down to here and then started to move back up. As long as I'm in this plus or minus one normal channel, whenever the slope of that goes from negative to positive, I want to put back on my full position, regular position size, dollars at risk, as soon as that thing goes positive. And when it goes through the midpoint, then I feel very comfortable that I did a good job of finding the swing between winter and spring. And then all the way up to plus one, I've got a full position on. When it gets above plus one, it is very tempting to say, wow, am I any good? Have I really developed? No, it's just the market is hyper aligned with your rules.
With what? Right.
And also probably your targets. It's probably more so the targets than it is your patterns, which are sort of standard. It's just that target has an adrenaline rush and is going. So what I'm going to do when it's above plus one is I'm going to be paying even more attention to trying to put turbo positions on intraday, but no overnight risk, because that's where you get big adverse gaps. So I'm going to use turbo especially, but I'm going to keep my overnight risk normal. When this thing peaks, if it peaks out, greater than plus one, I've got to, I can probably still turbo, but the days are numbered. right?
Mhm.
When it comes back, if it comes all the way back below +1 and back into the normal channel, then I got to just be grateful that all of this stuff up in here was a gift that I did
Mhm.
not
Yeah.
deserve. And it wasn't that the system is super brilliant. It just means that the market
Everything aligned.
and the target
Yeah.
were just perfectly aligned. The planets were in season.
Yeah.
Now, from -1 back to the 0 line, I'm probably not turboing because I now have had a series of increasing failures. I'm still positive expectancy because it's above the average, but all of the extra goodness is gone. As soon as that goes below the 0 line,
Mhm.
this is where I go to either 1/2 or 1/3 of the dollars at risk, all the way down to -1. I'm at that reduced risk per trade. I still keep taking the signals. I'm just
Yeah.
my dollars at risk. That's why we want to track the R capture per trade, and then we're keeping track of the dollars that we earned. This is what we're earning when we apply dollars at risk per trade. The R capture is independent of the dollars at risk. The R capture is the size of your risk box signal from the moment you got a signal to go long, plus the R value of whatever you took to be evidence that it wasn't working. So whatever that 1R is, you're expressing all of your wins in terms of R capture. That tells you, you're always aiming for 2 or 3 to 1. Like if you're using the rule of 4, you're looking for 3 to 1. And then your R capture tells you how much of that 3 you're getting, and it has a very strict risk. The where you are in your 30 trade cycle in this little indicator tells you this answer: how much should I be risking? So I should be full position size as soon as it turns from negative to positive inside the channel. You don't want to slowly increment back in. That thing is in the spring, and you should be planting full positions. And that way you can enjoy the big long moves all the way to Z+1 and beyond. Once it rolls over, you're not taking extra signals. You're starting to reduce the turbo. You're being very particular with your target selection and not taking shortcuts and no waivers, any of that stuff. And you do that all the way down to the 0 line. When it gets below the 0 line, it's still in the normal channel, but you go to 1/2 or 1/3 dollars at risk. If that ever goes below -1, then this
Get
is
out.
pure paper. You keep trading it, or you trade one share so that you have skin in the game and you are staying faithful to the rule set. As soon as that reverses, you can start risking, 1/5 of your position. When it gets back above the 0, the -1, you can go to full position. The main point is, once that thing has experienced its horrible winter and now come back into the 0 or into the normal channel and it's rising, you want to be on full position size because the slope is rising. Over here, when it goes below the 0 line, the slope is falling. There's no joy in that whatsoever. That's why you go immediately at crossing of the 0 line to the reduced dollars at risk. But when it is done failing and has climbed back into the beginning of normal, that's where you go to full position size. So Jeff Bernson showed the results of that on his system, and it's very persuasive. Should watch the Monday night session with Jeff. Bottom line was he added probably 50% to his expectancy. meaning instead of 0.3, he was at 0.45 per trade.
Mm.
Instead of capturing 100R, he was capturing 150R with the same trades, the same R capture, but he was actually his net return in dollars was 50% improved because he got back to normal position size in a hurry. And the key on that is that you're continuing to execute the system's signals correctly. You're not changing the rules. You're not changing the architecture or anything like that. The only thing that you're adjusting is the dollars at risk per trade. And that makes all the difference in the world. So that's what you do when your system, how do I know my system is out of alignment? Well, because the slope of the expectancy just went below -1Z. I don't need any more explanation than the aggregate performance of a properly executed rule set. That's actually your advanced form of market classification for your rules. You have a personally tuned market classification that's exclusively appropriate for your rule set. And it is exactly the slope and the location of the 30 trade expectancy. And when you do that long enough, you'll start seeing that little band of excellence. And when you take the 300 trade average, you will see that thing. It looks, just like this. And then you can notice, and when you do the plus or minus 1 SD, hey, if that thing ever dips below that, what did the net when it reversed? It will almost always go all the way to the far side. So this is where you want to pick up the full position size once more, because you're back inside the range of normal, and you still have 2 full standard deviations of improvement to go. That's where you make bank in the spring and the summer. And then you just got to watch you don't become too big for your own britches up here and it starts to roll over. That's not when you want to start trying harder. That's when you want to make sure that I am strictly following the rules, because the wind is coming out of the balloon, or the air is coming out of the balloon at that point. So that's what I wanted to say about that approach to appreciating we call that stationarity. If my expectancy of the last 300 trades was here at 0.3, that's a point description of 300 trades. If I did it in 30 trade segments, did it look like this? And that's why the average expectancy is here? Or did that thing look like now suddenly they share the same average, but when that thing goes below average, this is all bad. But it turns out that's a really good recovery that lasts a long time. So you want to get an appreciation for how that thing moves around over the last 300 trades. It's always a 30 trade moving window, but it operates within the stable long-term average and standard deviation.
Yeah.
Does that make sense to you?
Yeah. No, it really does. Yeah.
All right. As you start working to implement that, you probably have enough trades now to establish your 300 long-term basis. And then you can plot the other moving line inside there, and that'll give you very interesting insights. Now, on the positive tip, what I would say is these last 15 days, really, it's only been 15 days, have been absolutely murderous for a lot of people. And for you to still have a coin flip that pays 1-to-1, basically market neutral, is already 10% better than the average dude out there on the street.
Yeah. So, but it still freaked me out.
Oh yeah. And that's why you got to do what I said. And that is take a deep breath, let it out, You got
Yeah.
to become
Right.
you got to become not the trader, you got to become the coach and the analyst and start
Yeah.
looking at game film and start taking a look at the seasonality and putting
Yeah.
things into longer term. So you got to become wise as well as skilled
Mm.
and adaptive. You got to be wise in those moments about how to handle the larger than expected change in volatility and expectancy. So, zero state,
Good.
owl meditation. And, for 4 months in a row, you had a pretty good run right there.
Mhm.
And
Yeah.
so now when the market is aligned with my systems, it wasn't
Right.
that you did anything different. It's that the market returns to its old long-term stable behaviors.
Yeah. Yeah. It's already started. Last couple of days, it's
Yeah,
started
yeah,
to move. So yeah.
yeah. Tech is recovering better than the Dow.
Yeah.
And
Nvidia and Planetaire and all those guys
yeah,
are
so I think all the
yeah.
story stocks that got hammered
Mhm.
for about 40%,
Mhm.
sometimes 50, 60% losses. The little discussion I had over the weekend on BBAI,
Yeah.
it went from 4 to 10 to 3 in 30 days. Well, shit, that's a 250% move on the upside, a
Mm.
70% loss on the downside. And that those signals on daily charts are as clear as a bell. Cannot miss
Mm.
them. So there's something to be said for this sort of almost disinterested philosophical scholarly approach to help
Mm.
smooth out your trader side.
Yeah.
It's a good counterweight. All right, explanation done. Go ahead, keep going.
Yeah, and the last thing here, and I think you mentioned this a week ago or so. SPY is starting to flip over on a monthly basis. Some of the other
Yeah,
markets, you see
yeah.
these, big monthly things curl over. I mean, what do you think going forward? I mean,
Well, I
what do
just
you
think
think?
what I do is, if this was the Kneffen model, we would be in the state of confusion. And when you're in a state of confusion, what you do is you shorten up all your time horizons. So I'm not
Yeah,
doing any
cool.
swing trading, uh, with the exception of Brazil and the Euro Asian ones. The global ones are benefiting from the chaos in the US. So there's actually
Yeah.
some swing trades in there, but not that many. And I'm going exclusively intraday. I have no directional bias. I'm reducing my span of control. I'm trading at normal position size because my expectancy is still good, but I'm just taking fewer trades and not being aggressive with portfolio heat. So I'm kind of like I'm like at 1/3 speed,
Mm.
all ahead 1/3, and continuing to march with standard patterns and looking for the new leadership
Mm.
to come back in. My expectation is that
Mm.
Palantir and Nvidia continue to
Mhm.
be the guys.
Yeah.
It's not clear to me um, where else to look, except I think the steel companies are very, Cliff,
Mhm.
Nucor, and U.S. Steel are interesting because um, if this is a robust long term strategy to return industrial capacity to the U.S., then you have to have domestic steel to do that. So I would expect that to be the long term beneficiary of any extended trade wars and tariffs is steel.
Mm.
And then because you need steel for cars, tractors, and main battle tanks and a navy. So I think steel is sort of a natural one. But other than that, it's hard to see
Mm.
the long term sustained advantage. So I'm not even going to bother with that. I'm just going to be doing intraday trading and then selectively carrying risk overnight and only with markets money
You're right. Yeah.
until this whole thing. Like right now, we're in sideways volatile markets. That says you shouldn't be swing trading at all. so I'm not really. I'm only at what I'm doing is essentially, if I have a good day, I might keep 20% of the market's money to keep a position riding in case I get a favorable gap. But that's the only swing trade I have as my exception. When this whole thing calms down and the slopes of the regression lines all kind of are back and heading north and are at least at Z-1 or better, then I can begin to feel a little more sanguine about resuming swing trading. But right now, until the chaos, I think we got another 30 days of chaos because he's pushed the next round of tariffs out 30 days. And we're going to have a government shutdown on Friday because those idiots, God damn. And we're going to eliminate the Department of Education with a meat axe. So none of those, and Ukraine peace deal is on again, off again, on again, off again. That's chaos, and you don't swing trade during chaos. You shorten up your time horizons. Don't take any overnight risk. Reduce your span of control, and be scrupulous about your risk management, and you keep firing. But that is standard work for abnormal volatility.
Yeah.
So that's my 2 cents.
Super. Great. Thank you. That's all I got.
Okay. Shalom.
So I only take 2 trades with a half-hour loss. One give me 1 hour and then come back to break even.
Yeah.
Another move up half-hour and come back 1 hour. So that's the thing. Probably I switch to paper trade.
Yeah, I think that's the turtle being safe and proper.
Yeah.
I think it's exactly the right thing.
Yeah. Continue revise my spreadsheet. Reset the risk 1 hour as 1.5 ATR.
Yeah.
Or the ATR stats, whichever is large. Hopefully, keep me in the trade longer. Also, implementing the weekly MACD histogram signal, the Dr. Alexander Alger's system.
Yeah.
When both up, that's a green, so I can take long. Both going down, that's red, I cannot take long. I start use the Grok 3. That's really powerful, much better than the Microsoft stuff.
Oh, it's 100%. It's more than 100% better. Here's what I did today, just to, if I may.
Yeah.
And this came out of my briefing with that general. So I created my top level. I improved. I've had one for a while. I wrote a comprehensive protocol, a specification for my top level strategic sage advisor, which combines the Chinese Junzi, man of excellence, and the Greek man of excellence, and a laundry list of about 20 different modes of thinking that are specified, that I directed. I need to be a world-class practitioner of these things so that I can give life and death advice to senior Army leaders. So it can't be just taking probabilistic first come, first serve answer. It's got to be a really thoughtful answer. I said it also has to blend the insights from Western ways of knowledge of science and logic and objectivity with indigenous ways of knowing, like intuition, values, spirit guides. It has to fully respect both of those traditions. It has to make a Toolman argument model analysis of any claims or recommendations, which is an evidence-based philosophical way to map arguments to evaluate the quality of the argument. The Toolman argument model includes a rebuttal, which is the strongest argument against your position. And you have to do that fairly. And then you have to come up with your answer to the rebuttal. And then on balance, your argument should be better than their best rebuttal. So then what this thing does is it creates a Toolman argument model. If it notices that's what you're doing, is making a recommendation, it takes the rebuttal and builds out a full Toolman argument model with that as the primary claim. It then takes these two strongly developed arguments and subjects them to an Oxford Debate Club process of public debate. And then it picks 3 demographics that have not yet made up their mind and listens to the 2 arguments, and then makes a voting process to decide which one was the most persuasive, and is there a way to reconcile and find a common way ahead from these 2. So it's like the thesis, antithesis, synthesis of the Hegelian dialectic of progress, which lurches ahead when 2 warring parties get exhausted and they find some common ground. That's Hegel's thesis, antithesis, synthesis. That's it's called the dialectic. So it incorporates all these things into this prompt that describes how I want the AI to work for me every day on every new task. And I say, what I want you to do is look at the task I've given you, decide how much of that needs to be invoked, give me the opportunity to expand into the full method if needed, but be as abbreviated as necessary or as comprehensive as you like. And then I said, now, I want you to write this prompt in such a way that any other AI, I could load it in there with a cold start and it could run it effectively. So you got to be concise, but also complete. And I said, now, monitor the size of the token context window, which tells you how much space it has to do its thinking, and then automatically refresh yourself if it ever looks like you're running out of space to discuss, so that I don't suddenly lose this advice. So I was happy after about an hour of where that thing was. I've been working on this off and on for a while, but I finally had it in a really good shape. I did that in Claude 3.7. So I took that prompt and I took it over to Grok 3 on the deep search, which is where it does its extended reasoning. And it took 30 minutes to do the following. I said, hey, Grok, I want you to evaluate this prompt and use itself as its own standard. Like it proposes to be my top level strategic advisor, and then it meets all these criteria. I said, use those criteria to evaluate whether it is actually capable of doing that, and then make any recommendations or adjustments that you see fit. And it said, well, that prompt would work very well if the AI was an advanced model and it had access to real-time search. But if it's not, it may not understand all of the things that you said. I said, no, well, good. Then update the prompt. And now I want you to write about a 50-page technical specification supplement, which contains all of the implementing instructions for all these different models and procedures that I could load as a library, so that that prompt could refer to that if the AI didn't have the ability to do live search. So it gave me an amazing package. And I now think of that as my, I asked Grok, I said, what's the best way to use this product? And he said, well, you should start every new chat with the top level executive prompt. And then you might as well upload the technical library so that it always starts at the highest possible level. And then you don't have to worry about it overlooking something. And then because you added this module that would self-refresh if it was starting to run out of token space, it never prematurely ends. It'll always give itself a boost of adrenaline to keep going. So that little process is extraordinary. Because you're using Grok 3, I'm going to send you guys that specification. And then what I would do is just take your AI of choice, run that prompt actually do this. Start with your AI of choice. Don't do anything special. And then I want you to summarize your default position, perspective, and principles when you get a new task from me. And that'll tell you what the AI is in its natural state. And typically it would be something like a high school Boy Scout. It's going to be loyal, trustworthy, thrifty, kind, and try hard. And then once you know what it is in its default state, then load this super protocol and then ask it the same question. And then notice the difference of what your default staff officer is when you use that prompt. You'll never not use that prompt once you see that difference. Anything that you ask it to comment on, trading or otherwise, or just positions, it is an extraordinary tool. It's a power tool that I've been working on for over a year, essentially, to get to that level. In retrospect, it's easy and obvious now. But since you're using Grok, what makes Grok 3 really powerful, more so than any of the other models, is that they did not stop training it on some date. They trained it up to a point and then said, we're going to keep training this on the basis of ongoing queries and answers and what it's learning from all of the outputs that it's given everybody. Because we've got 200,000 NVIDIA GPUs down in the data center, and it's got all this power. It's continuing to update its own model going forward, and the other models don't do that. So Grok turns out to be a great way to supplement or triangulate these other models. So I use Claude 3.7 and Grok all the time, and sometimes in competition, sometimes in partnership, but so that I don't get locked into a single way of looking at the world. I then use Google's Notebook LM as a way to summarize the top level content that those two models create. It turns out that Google's Notebook LM does a nice job of rendering down to one-page executive summaries and doing study guides and things like that. So between those three models, I have a really good workflow now for AI. And I'll send you that one, that top level Sage. And the tech spec. It's pretty cool. All right, what else you got there, Chinlo?
Yeah, so I started with a simple question. What I found out, Grok 3 actually can search and read some Amazon books. I don't know how, but he gave me the link. And then he accessed some other website I never heard of if I click the link, I cannot access. Must be a good source.
Yeah.
Anyway, so I upload the two books, a PDF, then clarify a lot of things.
Yeah.
Eventually, I know every detail about the system in the way I can code it in the spreadsheet. Very good. Now, Ken, I can have a question to you.
Okay.
So about the watch list. So I need to decide my trading universe for the two swing system, the workshop 30-day auto framer,
Yeah.
the triple screen auto framer. The two systems have each have two sub pattern. One pattern is your original work.
Yeah.
The other one is the 30-day as the target. So my goal is to make the system pure mechanical action on the end of the data and chart, mechanical entry, mechanical initial stop, mechanical trading stop.
Yeah.
I can occasionally look at the intraday chart to adjust the trading stop only when I have time. My long-term goal for the system to generate two position are monthly. That's not big one. So currently I have the watch list including Dow 30, your ETF 32, plus some other ETF, total 75 ETF, SP 100, Nasdaq 100, also including your swing list. I have a total to save 265 symbols.
Yeah.
No, what I found out, this spreadsheet give me too many signals, even currently.
I think you have like I would I would try to be closer to 10% of that list or 20% of that list, like 50 symbols that gave you a good coverage of sectors. Like you got to have the energy sector, finance, tech, and industrials. Those four sectors are the ones that move the most in the S&P.
Okay.
The other ones like consumer staples and all that. You don't need more than like, and in the Dow 30, you probably only need 10 to 12 of those. Like you got to have Coke, Home Depot, Walmart, and McDonald's and Johnson and Johnson from the non-tech sector. That's it. Like you don't need JP Morgan and Goldman Sachs. You need Goldman Sachs to compare to XLF. It's either the sector or it's Goldman Sachs and regional banks. So those three give you the entire coverage of the finance sector. You don't need, like there's in the S&P 500 in the symbol XLK, there's like 89 tech companies. You don't need 89 tech companies. You need Microsoft, Oracle, NVIDIA, Palantir, and now change my mind that I need more than that. Intel is interesting as it tries to make a comeback, great American chip company and all that shit. Okay, whatever. It's a story stock, not a good semiconductor stock yet. They just got a new CEO and it popped 12% today. So maybe that's the signal of a 3 to 6 month grace period for turnaround. Wouldn't surprise me to see them become the beneficiary of targeted government contracts to rebuild American chip making capacity as a counterweight to NVIDIA. So I think 265 is too big. That if I was going to be a purist, I might take your AI and say, give me the 50 least correlated stocks that gave me a broad diversification so that I could concentrate on 50 that had the most. I want them to have the highest average daily volatility, right?
Yeah.
So that it moves more per day on average as a percentage of his price than his peers. because what I need for short-term trading is more volatility, not less. That's why XLU, the utility ETF, is almost impossible to trade intraday because it lacks volatility. So I think the 265 total should be more like 50. So that's 20% of that list. I would try to whittle it down to the 20% most important ones. I'd even ask AI to help you figure out which ones have the widest correlations, I should say, the least correlated. So you're working on the extremes, and the highest average daily volatility, so that I have something that is a known mover. When it moves large. And that's what I think you want for swing and day trading. Is you got to have a reduced target set that has reliable volatility and is diversified, so that as the sectors of the S&P go in favor and out of favor, you always have a target, a company that's benefiting from that move to a greater extent than the sector spider, right? So XLF is more volatile than SPY because it's a sector, but JP Morgan and Goldman Sachs and regional banks are much more volatile than XLF. So you could, in that scenario, you could say, is XLF diverging from the S&P? Then which of the target companies is more volatile in that direction? That's the leader. That's the one I want to be trading. So I think you could do that with 50 symbols instead of 265. And then you could become an expert in all of those. When you see my little daily report, my little watch list right there, that's what I'm doing with that list. If it's not on that page, I'm probably not trading it.
How about the ETFs? Should I?
So I think even with ETF 32, like there's sector spiders that I don't even look at or won't trade, like XLU, ignore it.
Yeah.
Consumer staples, ignore it. Just trade Johnson & Johnson and Walmart because that's actionable. I don't trade the telecom companies, but I do trade energy, finance, tech, and industrials. Those four seem to me to be the biggest movers reliably, and they are least correlated to themselves. So one of them is always rising and another one is always falling. There's always that kind of sector rotation between them.
Okay.
So that's because you have enough patterns.
Yeah.
Like if you only had one pattern that you were using, like the SSC, then you would need a lot more targets in order to generate enough starting cases, enough trade frames. But you've got quite a few distinct patterns. So you're generating a lot of signals when symbols are in different conditions. So you can reduce the number of targets. And because you have more signals generating, it compensates. You have a workable amount of. So 50 targets and 10 patterns essentially gives you 500 bites at the apple, right?
Yeah.
Whereas if you had only one pattern and 265 targets, you have 265 bites at the apple. So I'd rather have 10 patterns and 50 symbols, because now I have because I get some patterns for long side breakouts. I get some for short side collapsing dragons. I get some that are oscillating, some that are kata twos. So I always have, no matter where the market is, there's always a pattern that's kind of optimized for what it's doing. And then with 50 symbols, that's more than enough to find tradable targets. That's my experience.
Okay. I'll do AI search for next week. That's enough for me to do next week.
Okay.
All right. Thank you. I hope.
All right, Eric, any final comments? You good?
Yeah, say just a quick one. What do you think about like Caterpillar and United Health and those kind of companies? Is it too early, or you think they're
United Health is too early because we have no idea what's going to happen with are they going to try and take on big pharma and go after health and human services and Medicare and Medicaid? That changes all those dynamics. So I wouldn't go anywhere near that sector at all. Caterpillar, to me, is the strongest case for a great American industrial company that has a locked up global marketplace anyway and could benefit from a return to sponsoring U.S. company. I think that's actually an industrial company that's well suited to get a tailwind from all this protectionist racket,
Yeah.
So I would watch that one carefully on like a 3-day chart and a 9-day bar, and just kind of try to find those good clear turning points in order to get my first quarter position in. I would expect that one to be early indicator of a return to industrial goodness.
All righty. Thank you.
Yeah, the Caterpillar give a washout pattern. That's why I take it.
Yeah, and that's one where that means it's at the very bottom of the trading pattern and has the maximum room for. Is it going to go to zero? No, it can't, because the rest of the world is building and they need Caterpillar. So we'll figure it out. When Caterpillar's in a washout, I'm happy to play that one for the long haul. But I'd start with a 3-day bar and see that and get a little more confidence in it. Okay, that's everything I got. We'll get this published and posted. What I'm going to do is, I'm going to end this one so that we can run it separately. But I'm going to, in about 10 minutes, I'll start to. I got to finish up the reports and get that shit done. So, anyway, good to see you guys, and see you on down the road. Ciao for now.